Welcome, welcome, welcome. I've got a great guest today for you. His name is Bryce Paul of the Crypto101 Podcast. They're getting 100,000 listens per week, sharing crypto insights, interviewing industry leaders. You can go and find them, of course, on all the places you listen to podcasts at, obviously. Also find their YouTube channel and on Twitter. But we are going to dive in deep because there's a lot of news happening right now in the crypto space. Bryce is a man who's got his finger on the pulse of what the heck is happening in crypto. And we've got a lot of things happening. It's been definitely a high energy week for the cryptocurrency markets, without a doubt. So yeah, Bryce, welcome to the show, man.
Oh, hey, thank you for having me on. Really excited to be here and talk to you and your audience, just kind of about what I'm seeing in the crypto space. And yeah, big day. We're recording this. The ETF is looking like it's approved. I don't know, like it seems like there's some approvals, and then it seems like the links aren't working, and then some people say it is. Some people are still waiting for confirmation. So we're here, we're waiting. The volatility's starting to rise. Crazy day, very, very, very monumental. So I'm excited.
Yeah, it's crazy. What a time to be in markets. If you're here now and you're listening to this, like you're here at a special time. I'd like to say that. But before we get into
Truly.
all the news and all the juicy bits, I just want to tell you to tell us a little bit about the Crypto 101 podcast and kind of a bit about your background and what got you into crypto.
Yeah, certainly. Crypto101 Podcast, we've been around since July of 2017. And I've been in the industry for about a year prior to that, and just really, started to get involved with crypto by buying it myself. And, I heard one day about a big meeting that was going on. Brock Pierce was giving a presentation. I'd heard about him. He founded one of the first crypto hedge funds. So I was like, let me go check this out. It was at a local university, and basically, back in 2017, I was learning about, how blockchain is not only going to affect, monetary networks, but how it's also going to affect media networks. And media was the kind of business that I was working in at the time. So I stopped dead in my tracks. I was like, wow, this is crazy. Went home and kind of bought a little bit of Bitcoin, bought a little bit of Ethereum, started to explore all the other altcoins. And as you know, 2017, when that hit, it was a big wave. And I thought I was a genius. I thought I had bought all the right coins at all the right time, realized I was just in a bull market, and then gave it all back in the following bear market. But man, did I learn a lot. Learned a ton, got super hooked. And yeah, just wanted to continue spreading the word about, why I was so passionate about crypto. So I wrote a book called Crypto Revolution. You guys could check it out on Amazon. You could go to cryptorevolution.com. You could check it out there. Wrote a book, and people were interested. We got a lot of purchasers. Started a newsletter as well. So every week we write a newsletter. We call it the Crypt Nation's Market Movers newsletter. So we're always putting together technical analysis, fundamental analysis, just kind of commentary on the news flow, where we think things are going. And yeah, we have a lot of fun doing that. From there, we just got really involved trading the markets. I was able to start a hedge fund with a couple partners. So that's Tower 18 Capital. So we have at that fund for accredited investors only, two different strategies that we trade actively. One is a long-only crypto fund. So we're looking at the market holistically, what have the best upside potential with kind of the most limited amount of kind of risk that we see. And it's an actively, managed portfolio of what we've deemed to be the best, select cryptocurrencies. And we also have a fund of funds where we allocate across a spectrum of different strategies and fund managers, guys from Pantera, the largest sort of oldest crypto hedge fund, guys like Block Tower, the largest open-ended fund in America, and many other sort of smaller ones and up and coming. So yeah, we're really excited about this industry. We think it's brand new. And again, it's 15 years old, but relative to gold, which is thousands and thousands of years old, and stocks, which, were invented in, the 1600s. And this is a very, very relatively new asset class. And we're still here with a lot of upside, in my opinion. Now, of course, that's not financial advice. Nothing I say is an investment advice. I'm not your personal financial advisor, but hopefully we could have a lot of educational discussion today for sure.
It's a really interesting thought to think about how early you are. I know if you watch crypto markets every day, you're going to think, wow, it's so late and everything's already. No. All of crypto, every coin you've ever heard of, Bitcoin, Ethereum, everything, less than $2 trillion total market cap. Less than $2 trillion total market cap. There are multiple companies in the USA which have a larger market cap than that. That's
That's a good point.
gold's 5 or 6 times bigger than that itself, let alone if you look at the market cap of Bitcoin specifically, which is largely, I believe, will go on to rival the market cap of gold one day.
Absolutely.
So we're recording this interview at a very interesting time because right now it seems we have got the Bitcoin ETF approval. Maybe by the time we publish this, we'll find out some other information. But from everything we see, it looks like we have a Bitcoin ETF. So very interesting. What's your take on this news? What's your take on how the markets are reacting to this news? And would you buy a Bitcoin ETF for your portfolio?
All great questions. So my short take, I think that there's going to be a lot of volume that trades Thursday, tomorrow, or if we posted this on Thursday, then today there's going to be a lot of volume. Primarily, you've got lots of kind of cross flows. You've got a lot of people that bought a lot of Coinbase stock and MicroStrategy stock and Marathon and Riot and all these Bitcoin miners as proxies. Right? Back in June 15th, when BlackRock announced that they're going to have this BlackRock ETF, you instantly had a lot of flows come into crypto, a lot of people front running the approval. So I think there will be some level of sell the news as there are billions of dollars of open interest on the CME futures, people front running this. There again, like all these people who have their proxy trades on, who are buying in anticipation of this big event. For other assets that are correlated, they might say, okay, now that it's approved, the trade's done, we're selling off. So there will be those flows. There's also, a lot of, potential sell pressure that can flow out of Grayscale, as those investors have been very impaired for a long time. They might just be excited to get out and realize those liquidity. So there's going to be, several $1 billion, I think, looking to exit on this opportunity on this day, right? Or this week that this thing comes out. But on the flip side, you also have a tidal wave in the background swelling up to kind of gobble up billions and billions and billions of dollars of Bitcoin. And this is because for the very first time ever, you now have Bitcoin securitized in a fashion that pension funds and mutual funds and highly regulated commodity funds or hedge funds, now they could, they don't need to go through the hoops and the ladders that they would have to go to custody Bitcoin themselves on Coinbase or a hardware wallet, or sign some kind of bespoke agreement with Coinbase for custody. None of that. All they have to do is go to BlackRock or Fidelity or their Charles Schwab account and buy millions of dollars worth of Bitcoin. And to do that, it is going to be a click of a button. So there's going to be billions of dollars that come out. There's going to be more billions that come in over the long term. So that's why I think short term, little bit of volatility, sell the news. I still think the lowest this thing could go is like $36,000 per coin, kind of in the week leading up. That would be maybe from where we're at today, about a $45,000 price per coin down to 36. We're not looking at anything greater than 25% of a drawdown, which is kind of par for the course for Bitcoin over the course of its sort of bull markets. In 2017, we saw, five, or we saw like a 12 or 13 drawdowns of 25% or more. Although I thought that was interesting, this past year in 2023 was the first year we didn't see a drawdown of 25% or more from peak to trough. So volatility is starting to smooth out. I think that's a really good sign. I think these long-term flows, you're going to have billions of dollars coming in. I think people still find this attractive. It's new. There's a Bank of America report that came out talking about the sensitivity of Bitcoin, the fact that it's so illiquid and that there's not a huge supply. I think there's about 118 times multiplier effect on every dollar of Bitcoin adds $118 worth of market cap to Bitcoin. And so they kind of took a look and, adding, $1 billion adds, it adds $118 billion worth of market cap. So just $1 billion, you could add, 10% to the price of Bitcoin. That's an incredibly sensitive sort of multiplier. Whereas if you have 1,000 or $1 billion worth of bonds or some other S&P 500, it doesn't affect the price that much. So short term, sell the news. Long term, this thing is going to six figures, man. I wholeheartedly believe that.
Absolutely. Six figures. Well, I think we'll hit a seven-figure Bitcoin one day. It's only a question of when that is the case. And it's a very interesting thing with Bitcoin because we have 75% of the long-term supply held by people who are holding it in their hardware wallets, and they're probably not intending on selling necessarily anytime soon. A lot of these people have exited fiat. They may not be coming back. That's always an interesting thought. We have 2 million Bitcoin sitting on exchanges. We have a Bitcoin halving coming up, huge demand increasing. Even before the Bitcoin halving happened, we had just regular retail investors buying the monthly production of Bitcoin miners, like crazy numbers we're talking about here. But one thing I want to follow up on, would you buy a Bitcoin ETF for your personal portfolio?
It's a good question. And so, I mean, for me personally, I think Bitcoin on a cold storage, cold wallet, that's kind of the preeminent sort of example of how a Bitcoiner should hold their coins. Hold them in cold storage, have a multi-sig wallet, have a ledger or a treasure or something that is completely offline. This is unseizable. This is censorship resistant. Kind of off the grid sort of money. And I think that's a really big value proposition for the global citizenry, where you have, people that live in these countries where, every 10 years or every 15 years, their currency is deprecated and the government issues a completely new currency. Right. So if you have, all that money in the bank, all right, get rid of it. We got to have a new sort of currency. Not saying that in the States or in, some, very, very highly developed sort of countries that this happens, although the risk grows and grows and grows as you see sovereign debt is now yielding 5%. I mean, that's showing that there's more risk that's being baked in. The higher these yields go, there's more risk in sort of governments in some levels defaulting on their debt, so they're paying a higher yield to incentivize people to loan money to them. But we do have a world where Bitcoin on cold storage and self custody is very important. There's kind of a war being fought over in Washington. Should this be allowed? Should it not be allowed? We'll see. For me personally, I advocate for the Bitcoin ETFs. I think people should. I think if you're not comfortable running your own node or having your own wallets, then you should buy a Bitcoin ETF. I think it's probably a pretty good expression of sort of bullishness on the space. If you think that Bitcoin's going to go up, I think the Bitcoin spot ETF is a better product than buying a Bitcoin miner or MicroStrategy or a Bitcoin future. Right? I think it's kind of a better way to just get more true to the market. Pricing would be a Bitcoin ETF. I think I have seen people say that it'll actually trade at a premium. Some of these ETF market makers, I think a guy named Reginald Brown went on Bloomberg and said he thinks that there's actually going to be an 8% premium to NAV. So there could be a little bit of inefficiencies in that market just based on the cash create versus the in-kind creation sticking point that the market kind of participants argued with through the SEC. So once that becomes in-kind creation, then that premium should close. So again, it's not going to be a perfect product. There's nothing as good as the real thing, which is just classic BTC.
Of course. Bitcoin is a very, very powerful tool, and wrapping it up and giving an IOU from BlackRock, it's not quite the same thing, is it? But
you have
one
to
thing
trust BlackRock, which
who trusts
don't.
BlackRock? Who trusts BlackRock? One thing I think about with the Bitcoin ETF, which I think is going to be very attractive for a lot of people, is the ability to then use that Bitcoin more tax efficiently. Look, it's not going to be everybody in every jurisdiction, but like for me here where I live, Bitcoin's taxed terribly, but a Bitcoin ETF is probably going to face zero capital gains. So like that's a huge value proposition for me long term. But obviously then it's like, but then I don't actually own my Bitcoin. So it's a bit of a dilemma. Can we just get
You're in
some more
between a rock and a
altcoin
hard place
ETFs,
there.
man? Come on. Let's get some altcoin ETFs so I can have some, gains on altcoins that are tax free. That'd be fantastic.
Yeah, it's pick your poison. You either potentially have to pay a lot of taxes or potentially don't even have the money to pay taxes on in the because you get BlackRock decides to confiscate your account for some reason or something.
You never know.
You never know.
You never know. It's you're
They've
having
done
to
some
trust
crazy
somebody.
stuff with their ESG thing and forcing companies one ways or another because they're trying to force behavior. I mean, you could look at Larry Fink talk. He wants to force behavior with certain economic incentives. So, I mean, I could see something screwy coming up down the line where, they try and, get people to fork Bitcoin, and only the Bitcoin that BlackRock holds is the real Bitcoin, and everything else, they could fork away other people. I don't think it would happen, because there'd probably be a user activated soft fork like there was when we activated SegWit to kind of get ahead of the Bitcoin Cash fork. But there's going to be some games, and it's now on that nation state level game. I mean, you see lots of people involved in this now. It's no longer just guys like me and you, or renegade traders. You have the big boys coming into play. So hold on tight.
Right. We have sovereign wealth funds that have been buying Bitcoin for years, like Singapore's sovereign wealth fund. We have state level actors, the UAE and Oman, Bhutan, all confirmed as at the state level mining Bitcoin. Russia largely rumored to be mining Bitcoin at the state level. Iran rumored as well to be mining Bitcoin at the state level, like literally the government doing
America
it. Right?
better kick it into high gear with all this activity from some not so friendly countries. They better get their crap together.
America really had a chance to be like a global leader in crypto, and I feel like the SEC has made it so that they were not the global leader. And that's still one of the biggest. The U.S. is one of the biggest markets for crypto, but that's about it in terms of regulation, innovation. Like, it's all going offshore.
Yeah, a lot of people are taking their business to more friendly jurisdictions, and the future's very uncertain. I have faith in I think there's a lot of good congressmen and senators that are fighting for crypto right now, that are trying to pass thoughtful legislation. All of the sort of lobbyist groups that we have in Washington now, and there was a super PAC that raised, I think, $80 million to try and start to influence policy in friendly directions toward crypto. So while we were a small industry, we've now become quite formidable. Coinbase has taken on the SEC. Grayscale successfully took on the SEC. Ripple, we're fighting back. So I'm confident on as an American, I'm confident that they're going to figure it out. The constituents want it. 50 million Americans hold crypto, something like that. I mean, you gotta, crypto is going to be around with or without America. So you better get on board, just like AI, right? I mean, you want China to be the leader in AI and have them, weaponize it or monetize it against us? Or do you want to be able to defend yourself and have, be able to, develop it simultaneously to be on the same playing field? To me, it's kind of a no-brainer.
Well, if you look at what the USA did with the internet, it's actually, they should have done the same thing with crypto, because they looked at the internet and said, okay, let's nurture that. And then what happened? Because they had a positive regulatory environment towards internet technology. Because of that, you had Amazon and Google and Facebook and all these companies spring up in America. Those companies, had they had a hostile regulatory environment, might have gone somewhere else. They might have gone to the UK or wherever else, right? And so the US got it wrong big time in this. But look, I want to switch up a little bit here. What are two of the biggest crypto trends that you're watching for outside? We're not going to talk Bitcoin ETFs, Ethereum.
Yeah.
Outside of that, two biggest trends that you see coming for the market in 2024.
Yeah, that's a great question. So, full disclosure, the coins I'll talk about and the narratives I'll talk about, I've got exposure to, whether through my hedge fund Tower 18, which you could see Tower 18 Capital. We invest in a lot of these themes. I'll say two that I think are really big. MakerDAO. I mean, you can't look at the DeFi space seriously and not mention MakerDAO. The ticker for that is MKR. And what they're doing is incredible. Just, not only, taking a look at what's going on with them, leading up to this current moment. In 2023, they had hundreds of millions of dollars of revenue. They took, and that revenue comes from, the interest that people pay on borrowing DAI, the DAI token. And, with rates so high, 5%, they're a credit facility that's like a bank, right? And so as these interest rates are really high, they're earning a lot of money. They're taking that money to kind of, in some capacity, remove Maker from the market, the MKR tokens from the market. So it has a very, very strict supply, and it's a token that has real revenues based on real usage. So I think it's it's one of the coins that I think in DeFi has a really strong Lindy component. And Lindy just being, kind of the Lindy effect is this idea that the longer something is around, longer a technology is around, the more likely it is to kind of perpetuate into the future. People get comfortable with it. This is like the oldest DeFi application. So they've had lots of success throughout even March 2020. The DAI stablecoin maintained its peg, while Tether and USDC and a lot of these things lost their peg. During the banking crisis in 2023, the regional crisis, USDC came wildly depegged. People were freaked out that, they had all sorts of different exposures to these banks that were failing, which they did. They had $2 billion worth of coins on SVB. People lost faith in that token. Guess what? DAI maintained its peg and recovered, any sort of deviations much quicker. People saw their reserves, they're on chain. You could see what's collateralizing these DAI tokens. It's not just trust. So I think that this is going to be a big idea. MakerDAO, that's one. And kind of going forward, they're doing a rebrand. So they're putting forth a lot of efforts to marketing this. They're going to redenominate the MKR token, which is currently $2,000 per token, and it's got about $1 billion, maybe $1.2 billion in market cap. They're going to redenominate it, and the coin will then come down. It's like a stock split in a sense. Will come down to, I think, right around 5 or 10 cents per token. So you hold one Maker token, you'll get 24,000 to 1 on these new governance tokens that they're going to call it. And this is like kind of a meme sort of play. They're redenominating it because I think they realized like the markets tend to have unit biases. Just like when Amazon does a stock split or Apple does a stock split, people say, well, I don't want to buy, a $2,000 stock. I want to buy a $10 stock. And so with Maker, most people don't really know you could buy, a fraction of a Bitcoin or a fraction of a Maker, $10 worth of it. But because of this unit bias that stocks have, kind of put in our minds, this redenomination should gather more interest from retail. And then Maker's doing sub DAOs. So they're reinventing the DAO framework, kind of in a sense decentralizing or fragmenting the DAO structure to make them more specific to each set of financial activity, maybe a lending and borrowing DAO, a trading DAO, all on the Maker platform, is kind of Maker being that L1 for DeFi, and all these sub DAOs kind of like a L2. So I like that. And then I also like kind of a non-consensus take on Bitcoin DeFi through the Stacks network. Mm-hmm. And the ticker for that one is STX. And Stacks, I'm just, I think that this is very interesting because it's got a really, really small market cap, about a $2 billion market cap maybe. But it's like the only legitimate layer 2 on Bitcoin. And it's a smart contract layer on top of Bitcoin. I think that there's going to be more and more interest of, Bitcoin as the ETF hits and the halving. So this kind of is a high beta play on that, rides the coattails on, more Bitcoin flowing into, more capital flowing into Bitcoin. And if you also take a look at there's so many L2s on Ethereum, for instance, Optimism, Arbitrum, Matic, you name it, right? And there's $20 billion, call it, of market value, and probably another $20 billion of total value locked. Stacks has a fraction of that, a fraction of the market cap, a fraction of the TVL. So you're kind of just betting, hey, a lot of this DeFi activity got really sticky and exciting on Ethereum. As Bitcoin becomes more easily developed upon, maybe there's going to be an ecosystem that's there, maybe more incentive programs. So Stacks is another big bet. Again, not financial advice. I'm just thinking, from a high level perspective, what are two kind of interesting, maybe non-super consensus trade ideas that I'm thinking about? Those would be two.
Nice. I dig it, man. There's so many opportunities.
So many good coins.
So many good coins. You're actually spoiled for choice. And depending on your risk, if you want to go high risk, you go low caps, mid risk, mid caps, and low risk, go with the high caps. And there's just so many opportunities there for the people who put in their own due diligence. I think you've named 2 great projects there that people now go do some more research on if they weren't familiar with them already. Bryce, thank you so much, man. It's great insights, great conversation. I really appreciate having you on the channel. You're taking a bit of time out of your day to come talk crypto with us.
Absolutely, Lark. Thanks for having me. And hopefully we'll chat again soon.